Hello guys, and welcome back again to the Babylonians Crypto channel. Today we're going to talk about GMX. GMX is a decentralized spot and perpetual exchange. And before we begin, this is not financial advice, so please do your own research. And to start off, all DEX and centralized exchange in general really looks at this KPI called liquidity. And the more liquidity you have, the lower your price impact, the lower your slippage, and the more users, especially big whales, are able to trade on your platform. And right now, this DEX use constant product formula, the X times Y equals to K, which is very inefficient. You need a lot of these arbitrage bots to solve all these price discrepancies. And GMX is actually using a new way of providing liquidity. And they are offering low swap fees, zero price impact, and you can trade up to 30x leverage. So the way they provide liquidity is this thing called GLP. So GLP is an index of assets used for swaps and leverage trading. So whenever users they want to do any kind of swap or this leverage trading on GMX platform, they are actually doing it through GLP. So they are exchanging assets with this GLP. And GLP, as mentioned just now, is a basket of crypto assets. So usually it will split like 50% stable coins and 50% are the crypto assets. So for Arbitrum, the crypto assets are Ethereum, Bitcoin, Link, and Uni. And the rest are all stable coins. And then for AVAX is AVAX, Ethereum, Bitcoin, and then the remaining 55% is stable coins. So another thing that you might notice is this thing called the weight. So this is a targeted weight for this whole GLP index. So let's say for AVAX, they have a target weight of 15%, and then for Ethereum is 15%, for Bitcoin is 15%. And then you can see that this is 17.25, this is 18.52. So this is the current weightage on the GLP. This means there's an overweightage of Ethereum and Bitcoin. And they will try to reduce the weight so as to hit their target rate. And the way they do this is through fees. So whenever you buy these GLP tokens, right, you actually have to do so through either of these assets. So let's say if I want to buy 1 GLP on AVAX, I need to deposit either of these assets. And let's say if AVAX is underweight, right, that means they need more people to deposit AVAX to hit this 15% target. So how would they do it? They will actually reduce the fees. So whenever you want to buy AVAX, you can actually save more money. So that is how they use these fees to actually adjust this target weight to the goal. And the same thing also, let's say if you want to sell your GLP, so let's say if there's like one that is underweight or one that's overweight, and they will adjust these fees so that to make users incentivize you to do certain actions. So in a nutshell, by holding GLP, you are actually providing liquidity to these users that are making all these swaps and trades here. And there will be no impermanent loss because the price is actually determined by Chainlink oracles. And then you are also earning 70% platform fees that are paid in Ethereum and AVAX. So this is really attractive because you are not paid in like farm tokens, you're actually paid directly in the native L1 token. And then the risk is you are actually acting as the counterparty to leverage traders. So you are acting as a market maker in a sense to provide all this liquidity. And you also earn escrow GMX reward. So later we'll talk about this. And finally, you are actually taking a diversified exposure to a crypto index and it's not GMX. So by holding GLP, you're actually taking exposure to all these assets inside here. So if the price of all this goes up, GLP also goes up. Price of all this goes down, GLP also goes down. But it's not really determined by the GMX price. So with regards to point 3, by acting as a counterparty to leverage traders, essentially you are like a house in a casino. So whenever traders win, you lose, and if traders lose, you win. And in general, the house always win, and the only way to win money out of the casino is to own one. So by owning GLP, you are actually being the casino. So you can see that this is the traders cumulative net profit, this dark blue line. You can see that they are actually losing, and when they lose, you are actually winning and making more money by just holding this GLP token. And then these are all the fees earned on Arbitrum, and these are all the fees earned on AVAX. So right now daily they are doing about 100,000 to 300,000 on Arbitrum, and here is about 100,000 fees daily, and this is quite impressive. And again, 70% of the fees earned actually are paid if you are just holding GLP, and they are paid in Ethereum and AVAX. So the next thing is GMX. So GMX is the platform utility and governance token. And by holding GMX, you are earning 30% platform fees, pay in Ethereum and AVAX. And then 2, you are earning accrue GMX rewards, which we will talk about later. And 3, you earn multiplier points. And 4, governance. 5, you are taking a position on the growth of GMX. So if the platform earns more fees, there are more users come in, generally the price of GMX should go up. So talking about escrow GMX, so escrow GMX are like additional rewards that are paid to people who stake their GMX or people who buy GLP. So you can use this escrow GMX to stake them and it will earn rewards like your regular GMX. Or either that, if you want to sell them, you have to vest them. And they're actually locked for 1 year. So you have to vest them over a period of 1 year to get all these liquid GMX tokens. And in this process, these escrow GMX that are vested will not earn rewards. And then also the principal tokens that use this escrow GMX have to be reserved to vest. So for example, let's say I have 1000 GMX tokens and I earn 100 bonus escrow GMX and I want to vest this 100 escrow GMX, then I have to keep that 1000 GMX stake and I cannot remove it or sell it or anything. It has to be reserved to vest this escrow GMX. And right now you can see these are the distribution rates. So 100,000 actually goes to GMX stakers, 100,000 goes to GLP holders, and then for AVAX is 50,000 and 25,000 subsequently. So when you stake GMX, you also earn multiplier points, and these multiplier points are sort of like bonuses for you to earn even more rewards. And you can see that they can be staked for fee rewards and they'll earn the same amount of fee rewards as a regular GMX token. So it acts as a bonus fee boosters on top of your GMX use. So a bit of the tokenomics, the max supply is 13.25 million. There are no VCs, and right now only about 250,000 is distributed to a team linearly over 2 years. So it's quite a small allocation. It's about 0.08%. So this project is really very focused on community, and the product in general is not towards insiders. So a bit of some ecosystem updates. A lot of DAOs and DeFi protocols are actually buying this GLP and GMX on the backend. So just today they actually announced this congruent announcement they will buy 5 million in GLP, and then Reverse Protocol also say that they will spend I think about 100,000 to invest in GLP in their DAO. And then Reimagine Finance also just added some GLP. So you can see this was done in February, so they added I think about 10,000 GLP. And then Taurus 5 also acquired about 100,000 worth of GMX. So a lot of all these DeFi protocols are actually doing all these things. And GMX is also an exchange. So there are all these DEX aggregators that are actually using GMX on the backend. So one example is OpenOcean. So I think they are aggregating from 14 chains and from Binance also, and they are using GMX on the backend. And this Yap on Avalanche also using GMX on the backend, and you can see that they actually drive the most volume for their product. And here are some stats for GMX. So they have done about 20 billion trading volume. This is really very impressive because they only started a launch on Arbitrum I think around September, August, and Avalanche around February or Jan this year. So in just like 6-7 months they have done 20 billion. And this is their TVL for their GLP. So total about 240 million stake. So most of it is on Arbitrum now, but about half is from Avalanche. And this is the daily trading volume. This is on Arbitrum. So right now they are doing about 200 million to 300 million. And then you add on AVAX, they have about 50 to 150 million there. So overall, I think daily is about 300-400 million. And just a few days ago, the market is very volatile, right? There's all this crash, and you can see that there's a huge spike here, and they did an all-time high of $786 million in volume in just a single day. So it's really very impressive. And to give some context, this is the trading volume of the top 10 DEXs. So you can see that mostly it's about 200 million to 500 million, and they are actually doing about 400 million. So actually, if you put GMX with all these DEX, they are already easily the top 5 DEX right now already. And then this is their daily revenue. And if you just draw an average line across, it's earning about 200,000 daily in revenue. And here are some relative valuation comparison that I have done. So all this data actually taken from token terminals. If you compare with DYDX and perpetual and then you analyze it. So I've done 3 examples to have a better picture. So one is based on the 7-day average revenue, one is based on the 30-day average, and the other is based on the 90-day revenue. And you can see that these are the price to sales ratio, which is just the FDV divided by the annualized revenue. And GMX is the most undervalued over here. And if you look at the past 6 months cumulative revenue, GMX is actually showing also the highest growth rate as compared to DYDX and perpetual. So fundamentally they are the strongest, but yet valuation wise they are the cheapest. And if you compare it to Coinbase, so this is Coinbase latest Q4 report. So I also did some comparison. So let's say if we take Q4 2021, Coinbase did about 2.2 billion revenue. And if you take a percentage of GMX quarterly revenue, which is about 52 million, this is based on past 3 months, over a percentage of Coinbase is about 2%. And Coinbase market cap right now is about 48 billion. So if you just take 2% times 48 billion, GMX implied market cap is like 1.1 billion. And right now it's only trading about 350 million. And again, this is just some rough ballpark figures, so don't take this too seriously, just to have a rough comparison of like all the exchanges. So it's really quite undervalued in my opinion. And if you think DEX is the future, then I think this is quite a potential one to look at. So right now the DEX to SEX spot trade volume is about 12.5%. And you can see just now that actually GMX is already taking about 2% of Coinbase trading volume. So that is quite an impressive number out of this 12.5%. Okay, so to sum up, there are really 2 ways you can play this game. So one is you just buy GMX, and GMX you are betting the growth of the entire ecosystem, more users, more trades. You don't care whether the index asset price goes up, goes down, whether traders are winning. As long as more activity, the better it is for the whole protocol in general, and you're earning 30% by staking GMX. The second way is to just buy GLP and you provide liquidity. So by buying, you are automatically providing liquidity already. And here you are actually holding a diversified blue chip index. So this is actually one way you can get into crypto. So you get exposure to Bitcoin, Ethereum plus like 50% stable. So whether market goes up, goes down, this is quite a diversified portfolio and you're earning 70%. But the bad about this is that in a scenario where it is bear markets and all these short traders are actually winning, it can be quite bad for GLP, because if the traders actually win, then you have to pay out stables to these traders. And in a bear market, your Bitcoin, Ethereum, and all these crypto assets also drop in value. So the value of GLP can drop quite badly in this scenario. Okay, so now I'll just do a quick run through on how the user interface looks. So you can see over here, this is the dashboard for GMX, GLP, and these are all the index assets. So let's say if you want to buy GMX, you can just buy AVAX and then transfer your AVAX to your MetaMask, go to Trader Joe, swap your AVAX for GMX, and then once you get your GMX ready, you can come here and stake directly to earn all these yields. So you can see that the yields here, a part of it is paid in AVAX directly, then the other one is accrue GMX. So if you want to earn Ethereum, then you can come over to the Arbitrum chain, and then same thing, just get your ETH or whatever and then swap to GMX, and then come here to stake GMX, and can see that a portion of it paid in ETH and then the other one is paid in accrue GMX. So that's for GMX. So for GLP, you actually just come over here, click on buy GLP, and then look at whichever fees are the cheapest. So just now we mentioned this saving in fees, right? So you just choose whichever fees that gives you the lowest. For example, USDC, they need USDC now, so you just convert to USDC, come over here and buy your GLP. That is how you buy GLP. So when you buy GLP, you're already automatically providing liquidity. You don't have to like come here, stake or whatever. And then if you want to vest your accrue GMX, just deposit here for GMX, and then this is for GLP. And then the yields that you get, you can actually just auto compound by clicking this button. So that's it for this video. I hope you gain a better understanding of what GMX, GLP, all this is all about. And if you find this video helpful, I would appreciate if you can just give this video a thumbs up and subscribe, like, share, and comment down below your thoughts, and I'll see you in the next one.